Hey everyone, Couch Investor back to another video for today. So as promised in the first part of the Palantir quarterly earnings video, I said I'm going to make a second one with regards to what they mentioned during the earnings call and especially my thoughts about, well, growth slowing down while the company is GAAP profitable. Of course, we have to talk about the fact that are they really GAAP profitable this quarter? Not so much, but they did say and promise her that for 2023, they will have positive GAAP numbers for the whole year. That doesn't mean that next quarter is going to be another positive one. Just means that we might have, as a whole, for 2023, a positive year, which would be a very, very big milestone. Again, remains to be seen if we're going to see maybe more of those little tricks in GAAP accounting that they did for this quarter. So I'm going to share all my thoughts in this video, but I just want to start with maybe the chart in this one. Usually I do this at the end, but I think right now it's a bit important, especially with the current situation in the market with regards to inflation, interest rates, Jerome Powell, etc., etc. Now, of course, the stock has gone up tremendously this year already, certainly after that huge green candle here during the earnings week. This is on the weekly chart. Now, tricky thing is that, well, we were way above the 200-day moving average, above $10, which was already something. Now we're sitting just over that 200-day moving average. So next week, if we cannot continue with another green candle on a weekly basis, it's going to be tricky to try and hold this level. Starting Monday actually the markets are closed, it's President's Day. So we're going to have one less day during the week. If the week turns out to be a red one, I'm afraid it's going to be a big red candle back around the $8.5 mark or so, staying under that 200-day moving average. Again, not ideal, but maybe we can form a little base here, see how the market reacts with regards to inflation, with regards to maybe another 25 basis points hike in the months to come. Let's see what happens, but overall, stay tuned. 200-day moving average is crucial. RSI standpoint was still fine. MACD still bullish under the zero line as well. So for the traders, let's say, keep an eye on that 200-day moving average in the next candle next week. And if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, I would really, really appreciate that. And if you want to support me even further, you check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Now, when it comes to this quarter in particular, we can clearly see a, well, familiar trend here. And that's the fact that the US segment of the business is outgrowing the overall business, right? Total revenue grew 18% year over year. US revenue grew 19%. Commercial revenue grew 11% year over year. US commercial revenue grew 12%. Government revenue grew 23%. That's the only one that is lagging here. So US government grew 22%. They did talk a bit about this during the earnings call. Some big contracts are still, let's say, on the sidelines. We're waiting for the final results when it comes to that, but overall not that far away. Then customer count grew 55% year over year. US customer count increased 79% year over year. So US obviously the stronger part of the business, faster growing part as well, and they expect this to become, well, bigger over time and stay this way. And I believe US, of course, we know that with Europe, especially the government side, but business-wise as well, things are moving way slower in Europe when it comes to innovation, when it comes to AI implementation, and especially now in defense as well. Maybe that will change over time, but right now I think we just have to stick with fast growing and strong US presence when it comes to Palantir. And of course, the same could be said here when it comes to total revenue for the fiscal year that grew 24% year over year, but US one grew 32%. Commercial revenue grew 29%, US commercial 67%. So huge difference here. Government revenue for the full year grew 19%, and here US government also for the full year grew faster, 22%. Now I do want to mention one extra thing here when it comes to cost of revenue. Yes, it has increased year over year, but on a quarter over quarter basis, this is actually less. And when it comes to stock-based compensation, this we talked about in the last video, but if you missed it, you can clearly see it has been going down year over year for this quarter and actually for the full year as well. It has been going down since the DPO, so that's actually pretty positive. And now when it comes to the net income, so I zoomed in here on that little phrase here, Q4 net income was $31 million, which reflects, among other things, $13 million of interest income, losses on marketable securities of $11 million, and $44 million gain from the step acquisition of our Palantir Japan joint venture. So, if you remove all of those one-time things or things that don't really, I won't say matter much to the business, but things that, well, over the long term, you don't really care much when it comes to really seeing if Palantir is profitable. Palantir on a GAAP basis was not really profitable this quarter. Of course, with these little accounting tricks here, yes, it was net income profitable, $31 million. But overall, the answer is no. That said, just having, let's say, the headlines that said Palantir is profitable on a GAAP basis, etc., they expect 2023 to be a profitable year as well. That, I think, shows the market enough, because remember, they didn't have to be profitable. Well, they could have been profitable years ago also if they operated, let's say, more efficiently, but maybe they would not have grown as fast, etc., etc. But they did say 2025. The street maybe might have thought, oh, it won't happen until 2027, like Alex said during the earnings call. But hey, we're in 2023, and then somehow they managed to come up with one profitable quarter, which was this one. And then, of course, let's wait and see what happens in 2023. But I think just showing the market that, yes, we can, in the Wall Street game, we can show you that we're GAAP profitable. I think that's a positive sign for the market, but they said as well for their clients as well. Of course, the clients need to see that the company that is basically providing them with top of the line AI software, etc., is financially stable. And I think that's a positive. Of course, in the future, we would like to be really profitable without any tricks. Now, when it comes to growth, of course, for this year, midpoint growth will be around 16-17% or so, which is far away from their initial goal of around 30%, right? Basically cut in half. So what exactly is happening there? So during the earnings call, they did mention a couple of things. To summarize it, I'll go back to the presentation real quick. And it basically comes down to a couple of charts right here. So commercial customer count keeps increasing year over year quite nicely. The average trailing 12 months revenue per top 20 customers increased just 13%. But we're scrolling a bit further. Deals closed, 61% more deals in 2022 than in 2021. Billings grew 21%. And then here is basically the easier explanation. So in Q4, they closed 55 deals of at least $1 million. 11 of those were at least $5 million. And 5 were at least $10 million. So as they mentioned during the earnings call, they will probably have a lot more smaller deals right now, because why not? Not every client, especially on the commercial side, not every client can spend $50 million on contract. So why not start small with them and then grow over time? That's why you see here that commercial customer side has been growing year over year quite nicely. They just want to attract more and more people into their ecosystem and grow with them. You can start with a contract of $3 to $5 million, and then, I don't know, if the company is successful, which it should be technically, if Palantir software does what it has to do, then that company, that customer will grow as well, and then the next contract will hopefully be bigger, and so on and so forth. Now, of course, that's all nice and well, right? I'm trying to defend the company, but no, I'm not trying to defend the company. That's just my way of thinking. That's maybe their way of thinking as well. They mentioned a couple of things during the earnings call, which sounds logical. Of course, don't forget, we're still in a weird macroeconomic environment right now. So not every client has the money to spend huge on contracts, whether it's commercial or government. For government, I do strongly believe that the current situation around the world will be beneficial for a company like Palantir. Of course, from Palantir's standpoint, they still have to execute. They still have to sell their product to customer, convince the customer that this is the best software in the market. Sign here, thank you very much. When it comes to the customer side, commercial side, of course, I would love to see continued growth in the US and in Europe. But if they say, look, the US is now a better market, a faster growing market, Europe is still a bit complicated, then yes, maybe focus a lot on US and grow that business in the next couple of years, and then show maybe the European side, look, this is what happens when a company joins the Palantir ecosystem. You should join as well. Maybe that will happen a couple of years' time, and then we'll see that side accelerate quite fast. But I truly believe that governments in Europe are slowly but surely waking up to this situation that, well, maybe the, let's say, peaceful times are over where, oh, we can just count on the United States to save us each and every day and we can just lay back, sit and relax. I don't think that's the case anymore. And I think for a US standpoint, that should have never been the case either. But hey, Europe is Europe. Hopefully they learn from their mistakes because, well, in the last year, it's pretty easy to see that Europe was not prepared at all. And so yes, although I'm still disappointed a little bit to see just 16% growth projected for this year, I do think that they might maybe do a bit more. I don't think it's going to be 30%, but if they come out of 2023 with, 20% growth year over year for the full year, I think most investors might be happy. Going into 2024, maybe an accelerated growth, that should be very, very positive. Of course, right now this is just speculative from me, but yes, growth has slowed down. Yes, we had a questionable, profitable quarter. Yes, US side is growing much faster than the other side. Still a lot to do for Palantir. I'm not here having a victory lap. I said this in the first video as well, and I say this in the next one as well. One quarter doesn't do it for me, and especially not with this kind of guidance. For the long term, yes, I'm still bullish on the company, but would still like to see some results, especially this year. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.